Hello everyone, Christian Evans here from Sanktuary. Just wanted to give a bit of a brief update based on a position that we're looking at in the German 30, the DAX. We had a good response yesterday based on our video, our first ever weekly walkthrough. However, we did make a couple of changes. Overnight and through much of this morning, we had quite a few emails from people wanting to have more frequent content. So rather than having to wait a week, they wanted to kind of have a bit more up-to-date, real-time opportunities. As a result, we've taken the decision to actually do what we're now going to call our daily dose, which is essentially going to go through an opportunity, an idea of the day, so to speak. So today now, it's about 5 to 2 in the afternoon UK time. The US Open is going to happen in about half an hour, 35 minutes time. So we're going to be looking at this opportunity. Hopefully you guys can have a quick look at it before the market opens, and we'll see how the Open actually impacts on this asset, so to speak. So first of all, I got the weekly chart up for the DAX. It's important for us as traders to kind of have a look at the higher time frames and position ourselves where we'd like to go if we wanted to hold our position a lot longer, so to speak. So you can see here, since 1989, we're in this distinct uptrend all the way up. Okay, obviously with every asset and instrument, you're going to have some ebbs and flows, but generally, if you're aligning the best fit of some, it's the correlation. It's a positive move to the upside there. So if we look down the lower time frames where we're going to be looking for our opportunities, I mean, let's go daily. That's fine. Again, just bullish. Our 4-hour time. Don't know why these charts are so slow. Now, as you can see from the 4-hour chart, it does kind of paint a different picture. So you can kind of see that for us as traders, we could be kind of confused if we just solely looked at the 4-hour. We're kind of only getting a snippet of the full picture. So it's important that we do look at the bigger time frames and then work down to where we look to actually enter based on using the smaller time frames as our timing tool there for us. So we can see here that the market is looks a bit bearish here. If we drew a couple of lines here, get a couple of lines going just always helps roughly now. Okay, so a couple of lines like that. Draw another one about there. Okay, we've just drawn these roughly just to kind of give an indication of that this time, based on the 4-hour time frame, the DAX is kind of doing a bit of a slight bearish trend there, even though you have got this very, very wide parallel channel in which it's trading. The important thing I wanted to look at here was actually what we see towards the more recent, so the 4-hour and the hourly. We look like we have a double top pattern. Now, based on the analysis we just did now, we can kind of see that the market's moving down, and we're in this channel, and we've had recent bounces off that downward sloping resistance line, that channel top there. We're more comfortable in believing that our double top pattern will actually be successful. Now, what I mean by double top pattern is exactly what it says in the tin. The market's moved up bullishly. You've kind of had this rounding off period at this arbitrary point. It's come back to a previous level of resistance as support, a role reversal. Remember your tech analysis training. And then it's tried again to push higher to try and surpass the previous high that it just made on the left part of the pattern there. It's unable to do that, and you can kind of identify why it's not doing that, and that's from the price action right by here. You can kind of see, if you kind of go in, try and zoom in right here, we can kind of see that you've got a couple of tall wicks, so indicating the market's tried to push higher, but before the close of the candle, and these are 4-hour candles, the market has, the sellers and the bears come in and push that market back down. So again, then the market's come back to the neckline of the pattern, and here it can be kind of quite choppy and tricky to trade for the people who are day traders, and even some of the swing traders also who get in on this opportunity. So we draw a couple of lines to help us here. So draw that kind of I draw one there, and we draw another one. But bear in mind what I said yesterday as well about you're looking for support and resistant regions. You're not going to be identifying individual prices. The higher the time frame in which you're looking at, there's a greater value of error there in terms of how you draw your lines. So even though technical analysis is about being quite precise and accurate in what you're doing, you kind of also want to make sure that you're getting a little bit of tolerance in the error that you make from drawing any patterns that you form, and kind of, you know, these kind of congestion zones here, that distort what might actually really be happening. So kind of draw these two lines here, and the important thing to note is around about this region here. So I'll kind of highlight this part in an ellipse. Right, so important thing about here is this is the position by which the market was prior to the Brexit vote. So before the Brexit actually went through, this is where the market was trading. Now there is another video I'll be posting towards the latter point of this week, which is basically outlining how the charts actually gave you a bit of an advantage in predicting the Brexit outfall. Now I'm in the process of filming this video, and I have a feeling that it can be quite controversial, so I'm trying to make sure that I kind of portray what I'm saying in the correct form, as not to come across as some form of gimmicky guy who predicted it and blah 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 in hindsight. So this here, so that's keep tuned, guys, and like and subscribe to actually follow and get an update on that video when it's released. So as you can see here now, the market has come up. We've had a Brexit. This level here is of a strong resistance for us. So the market's come down, and the important thing to note is since Brexit, the market's actually pushed well up to these previous highs. It did have a period where it tried to splice through, so that's that fake out that we were talking about yesterday, where the market's trying to push new highs, and it's basically the sellers are having none of it, forcing the price back down below this high. It made a second attempt towards the top to surpass, and actually succeeded. Now up by here now, the market seemed to tail off a bit and stop, mainly because of the downward sloping trend line, and the fact is around about 100, the market's losing momentum to the upside. People start unwinding their winning positions if they're long. You can see there's quite an aggressive move up to the upside here, so there's going to be quite a lot of people who are long who have made great gains in a short period of time. So they're going to look to take their profits off the table, and you're going to have the fresh short sellers coming in as well. So the market comes back down. It comes in within this region, whereby we've got previous support at this level where it's slightly surpassed, and also around about the region whereby the market previously decided to sell off after the Brexit. It's tried again then to push to the upside and surpass these previous highs at 10,800, but is unable to do so. These wicks here indicate the price action, the market trying to push higher and the sellers having none of it. So the market pushes back down on a second shoulders pattern that we had yesterday. We have what we'll denote as our neckline, which will kind of be the lowest point of the valley in the middle of the pattern, so to speak, in between the two peaks. And it's kind of quite choppy here. You can see there's quite a lot of price action around where it's cut in between this line. So you have got to be very careful about how you position yourselves in these sorts of situations. The market comes back to this level, and you can see there's quite a large area where the market's kind of quite choppy, and those day traders who are involved are actually going to be whipsawed quite a lot of positions, even if they are, for want of a better word, in the right direction. So the markets came down then to this level, which was 10,475, 476, 475, around this region, whereby the market is kind of near the lows of this region where the neckline is. So if we draw a separate rectangle, it kind of makes it a bit more clearer, especially in color. So we'll draw that like this and right across. Okay. Okay, that's roughly there. So the market there, it's all these wicks here, all this price action that's showing that the market is trying to move lower. At this point, the market closed, and no further price action was there until the morning after. Upon the open there, the market did actually drop 50 points here and continue to further forward. So that was a good opportunity for us to actually take intraday opportunities there to, the pattern's completing. So we've got this double top, we've got the downward sloping resistance line, which is giving us added justification to take the trade short there, and the fact that the market opened lower, so showing that it's got the momentum to the downside, and upon the open there, we will be looking to go short, and we made a couple of pips there. Now, the important thing to note is that we did make money during this opportunity. There will be traders that have, especially the day traders, who have actually lost money. Now, the reason why they've lost money is because they've got in on the short side as soon as the market opens with the opening figure, and they're hoping to hold the position, somewhere down, I don't know, 10,100. I think I worked it out, whereby the top of this pattern, if you measure the distance between the neckline, which is this sort of rough region here, to the top of the pattern, which is at 10,800, 10,775, around that region, and kind of mirror it down, it can kind of give you an estimation as to the target price level to get out for profit. So I wouldn't be surprised if it works out around about this level where you have got support at this 10,100 level. The important thing is that people are going to be entering here and holding that position, thinking to get it right the way down to this 10,1,000 level. So we kind of sketch that in. Let's make it more user-friendly to view. There we are. So that they're looking to hold that. The problem is that with most technical patterns, you're going to have a retest. And especially on a big pattern like this, the retest can be, again, quite choppy and difficult to trade. So those people who have gone in short, they've probably gone in a bit later anyway. They're probably around the 10,345, that sort of region, where the market is really, it's made its move. At this stage, the price has moved 90 to 100 pips. You've got this kind of area here which can provide some form of support region. The markets come up then to retest, and it actually overshot the actual level by which the retest is happening. I mean, there might be some of you that might think that that might have been a good level, but it did look quite choppy, so to speak. But then again, as soon as you saw this red candle, meant the market's ready to continue selling off, then you can look to enter again and hold the position in due course, looking for the target of 10,100 in around about that region. And remember, when you're trading as well, don't be stubborn in terms of how you take your prices. So you don't want to be losing 100 pips just because you didn't hit your exact price target when kind of was within 3 pips, but it didn't. You want to make sure that you do leave, you don't want to leave too much on the table. You want to take your opportunities when they're there. So we go down to the 15-minute chart, and the important thing that we can know here is today the market's moved up. Now it's moved up to this region where we have a role reversal, now resistance, previously support. Again, it's choppy. You need to be careful trading this, but it's around about that region. I'd be looking to use it versus this point which provided support. So this spike down here, translate that across, and you have a resistance level. The important thing, the market is here. It looks like it's made a little triple market's moved to the upside. However, we know and we're comfortable holding short based on the idea that this pattern's completed and is looking to move forward. So we can kind of gauge where we want to be positioned. Now, don't worry about drawing the bottom level of a channel in this example, but you can kind of draw a line from this high here all the way along. And that could be used as kind of a timing tool to look for you to enter your shorts, because we're comfortable going short based on the idea that the double tops pattern is completed. So the market's moved higher, which means that we can get a better price to enter short into the market if we've got that longer term view. That, I mean, I'm not talking about where you can be in a trade for 10-15 minutes. That's going to be 1 or 2 candles, isn't it? On it's 15, okay, 1 candle. But for those who are looking to swing trade, hold these positions for a bit longer, the market's kind of congesting a little bit here at this previous level of support, now turned resistance, and it might see upon the open of the US that the market actually starts to sell off. We've got a quiet morning in the US, in the UK, sorry, and when the US opens, we're hoping that the floodgates open will kind of try to look to target these new lows. Of course, the market can go up, and that's not a problem. We'll just look then for opportunities to, well, either go long, but not really. If you're going long, you kind of want to have a short term. It's going to be quite a momentum, quite volatile, kind of quick, impulsive move that you kind of want to be getting on the back of. But really, we're looking at around about this triangle here. Then this downward sloping resistance line to enter on fresh shorts to target these lows and eventually beyond to our price target of 10,100. Now, thank you very much for taking the time to watch this, and please like and subscribe.